Good evening everyone, welcome to the official YouTube channel of Officers at 24/7. How are you all? So welcome to this session, and in this particular session we are regularly having one particular session regarding the one unit of your IFS subject. So as you know, we have started the new series that is named as the Achiever series. In this Achiever series we are completing one particular chapter in one day with the form of most important MCQ. So as I have already told you in the last session as well, it's not like there are certain number of questions that we have that is most important question, and if we cover these questions we will be able to clear the paper. No, it is just as per the idea what have been asked in the May 2023 paper as well as in October 2023 paper. Accordingly, we are having these session to let you know what level of depth knowledge is required to clear your paper. Okay, so these are the questions that will be as per your IIBF book, but one thing is very important to know, these are not the same questions will be there. They might be there but not a guarantee. So what we are doing here, this is a Achiever series. You can see this is a second class of module A. So the most important questions are in the sense that if we talk about the paper pattern, there are two things, as I always say. First is conceptual understanding is very important, and second is your practice is very important, because to understand the way the questions will be asked in the paper, and for that you have to practice a lot of questions here so that you will get the knowledge how to cover the other subjects. So these sessions are going to help you out in attending the paper in very confident way, like because you have already practiced the question and you have completed the concept. So what we are doing here, we have every day we are having a certain number of question in this session regarding your first topic, regarding a particular topic. Every day before starting the class I will let you know what topic I am going to discuss today. So this is the topic for today, that is sectors of Indian economy, and this is the module A, unit number 2 of yours. So as we know, in the IFS we have 4 modules and all the 4 modules cover 45 units. So this is the second unit of your paper, and this is what, this is the second unit of your paper, that is sectors of Indian economy. Now if we are talking about IFS paper, there are 2-3 things that you have to do. First, focus on the understanding of the concept. Second, focus on practicing as much as you can, and the third is revision. These 3 things are very important to do. So if you have a fear of like how I will be able to pass this particular subject, now by doing these 3 things you will be definitely passing the subject in the single go. Now let's just start the session, but before starting the session I will be your mentor for IFS as well as for PPB for JAIIB exam. Apart from that, these sessions are going on only on Officers at 24/7, Monday to Saturday. If you want to join the PPB session, that will be in the morning at 6 AM. So we will be starting our day with the PPB only. And in the evening at 7 PM, you will find your IFS session Monday to Saturday. So do not forget to join these 2 sessions. So today we are going to talk about the sectors of Indian economy, module A, unit number 2. So before starting the practice of questions, first do make sure in this session you have to make sure 3 things should be done by you. First, understand the question, whatever concept is given in the question, that is important. Second, focus in the options as well. If there is a certain concepts in the option, that we also have to cover. And the third one we have, that is explanation I am giving here with the questions, because I will not only be discussing the questions and option and then I will let you know this is the answer. No, I will be giving you the explanation about the topic as well. So do make sure you focus on the explanation as well. That is important. So let's just start. So the first question is asking about which is not a component of the primary sector. So you know there are 3 sectors, and question is asking which is not a component of primary sector, and the option you have construction, agriculture, forestry and fishing. Okay, now let's start here. You can answer the question if you know the answer. Till then I will give you the understanding of this particular chapter. So first of all, there are 3 sectors in the economy. We have primary sector, we have secondary sector, okay, we have tertiary sector. These are the 3 sectors we have: primary, secondary and tertiary. Now the primary sector is also known as the agriculture sector, secondary sector is also known as the industrial sector, manufacturing sector, and the tertiary sector is also known as what? Service sector, right? So when we are talking about primary sector have 3 components. Okay, it have what? It have 3 components that you have to remember, and that what the question is asking. The secondary sector have 4 subsectors. How many subsectors are there? 4. And in the tertiary sector, you have 2 subsectors. So do remember, you remember the all subsectors of all the sectors. Apart from that, these sectors, primary, secondary and tertiary, have been divided by CSO. So Central Statistical Office, it was created by Government of India for the calculation of all the national statistical data, the national income, per capita income, GDP, GNP, unemployment, inflation, everything calculated by CS, or I can say used to be calculated by CO because CSO now have been replaced. It have been merged with the NSSO and now it is known as NSO only. Okay, so these are the 3 sectors we have. CSO have divided them so that it will be more easy for the CSO to calculate the national income and to calculate the statistical data of the country. So this is what we're talking about. CSO have been introducing these 3 sectors of economy, that is primary, secondary and the tertiary. Okay, now next. If I'm talking about next information, so you can see here, if there is a primary sector that related to your raw material. The collection of natural resources should be done in the agriculture sector. In the secondary sector, those natural resources will be taken, it will be processed and should be converted into finished goods. And the third one is a tertiary sector, that is providing services on the finished good. So the agriculture, forestry and fishing, they are the part of primary sector because they are somehow related to natural resources or natural products. But the construction is not. Construction is a part of your secondary sector. It's a part of your secondary sector. So secondary sector have 4 subsector. One of them you can see is construction. Second is manufacturing. Third is mining and quarrying. And fourth is utility services like electricity, water, etc. All these. So these are the 4 subsectors of secondary sector. The 3 component of primary sector is written in front of you: agriculture, forestry and fishing. And the 2 subsector of tertiary sector is quaternary sector and quinary sector. The quaternary sector is also known as a knowledge sector. Okay, in which the teaching profession, research and development profession, these kind of things comes. Second is quinary sector. Quinary sector is the idea behind the economy, like the decision makers will come under the quinary sector. Okay, so I guess the basic detail about all the 3 sectors completed in single question. So the right answer will be construction. Okay. Now, also remember, in the end of every session, I want all of you to be very active in the session. And in the end of every session, I want you to comment your score out of the total question we are discussing here. Like how many answers you guys have given correct. Okay. Now, second is asking Black Revolution is connected to. Now, in the second chapter, there are a lot of revolutions. Reason, because that's a sector of Indian economy. And to develop agriculture sector, Government of India have introduced a lot of revolutions. And those revolutions were introduced just to do what? Just to make sure that proper field or proper product should be developed in the country. So let me know the Black Revolution related to what? In the revolution, what kind of questions can be asked? You have a name of revolution: pink, white, black, brown, golden, silver, etc. Then you have a year in which the revolution was introduced until when this goes on. Then you have the name of the father, like who introduced that revolution. And also the fourth part you will get here will be your field, or you can call it a product with which it is related to. Like Black Revolution is related to petroleum. So whatever revolution have been asked, these are the 3 things can be asked related to the revolution. The maximum chances of asking the question is on field or product. The second will be your father and the third will be your year. Sequence, like maximum what level of questions, what kind of questions can be asked from the revolution. So they can ask which field or product it is related to. But yes, father and year is also important. So we have to cover all the revolution. So right answer will be here C. Next question we have, which one of the following activities can be included in the primary sector? So you have options out of these 4, which of the following is a primary sector's contribution or the activity that will be done under the primary sector. Now, as you all know, the elimination method, I keep saying use the elimination method. When you use the elimination method, you will be less confused among the options, as well as you will be properly answering that which particular activity will be performed. without any confusion. So okay, so this is what we're talking about, and the answer for this particular question will be, first is saying, acha, let's start with the elimination method. First is saying making sugar from sugarcane. So if you are processing the goods, if you process the goods, it means very simple, it will be a part of your secondary sector, because processing will come under the secondary sector. The third is saying giving loans to the farmer, that you guys are doing, and it will be your service sector. It's not a primary sector, it's a service sector. The third will be providing a storage facility. You are providing warehousing facility where the product can be stored. So again, it is what? It is your service sector. So the right answer will be your cultivating sugarcane. The right answer will be your cultivating sugarcane is your part of primary sector activity. So you can see the right answer will be your A question. Okay, so do make sure you answer the questions and do understand what other options are saying. It's not like just read the question and read the option and answer. You have to remember, no, understand the reason behind why this answer is there and what the rest options are belongs to. Okay, now let's move to the next question. So we were discussing about this question. So right answer will be A, cultivating sugarcane. Okay, so the next question we have, the dash covers activities in which, the dash covers activities in which natural products are changed into other forms. So first of all, if we are talking about natural product, that will be a primary sector. Now this primary sector resources will be converted into other form. What forms? Through ways of manufacturing that will be associated with the industry activity. So I think it's very simple question. First, you can see you have a keyword industrial activity. Second, you are doing a manufacturing. So the natural resources, we collect the natural resources from the primary sector. We process these resources. What we do, we process these resources, and after processing these resources, what we do, we simply convert those resources into final goods. And this is the part of your what? Secondary sector. This is your part of what? This is the part of your secondary sector. The secondary sector covers natural resources converted into finished goods. So right answer will be your A option. Okay. Now next question we have here. Which one of the following economic activity is not in the tertiary sector? So question is asking which one of the following economic activity is not in the tertiary sector. So tertiary sector is your service sector. Tertiary sector is your service sector. So first is asking banking, second is saying beekeeping, third is saying teaching, fourth is saying working in a call center. So if you are having a tertiary sector, it means it's a service sector. So what you guys are doing as a banker, you are providing services. What I am doing as a teacher, I am providing the service. So it means teaching and banking is a part of tertiary sector. If we talk about the call center, what's happening in the call center? They are also providing consultancy over the phone. So working in a call center is also a type of what? Service sector. But the beekeeping is your part of primary sector. Beekeeping is related to your primary sector because it covers your natural resources. Okay, so right answer will be your beekeeping, that is B. Okay, next question. Next we have the service sector includes activities such as dash, and option we have these four. The first is asking agriculture, dairy, fishing and forestry. Second is asking making sugar, good and bricks. Third is saying transport, communication and banking. Fourth is saying none of these. So we are talking about the service sector. It includes which of the following services? Which of the following activities? So you can see agriculture, dairy, fishing, forestry. Agriculture, fishing and forestry is simply the three components of primary sector. So this is related to your primary sector. Okay. Making sugar, good and bricks. It means you are creating a finished goods. And where you create the finished goods? In the secondary sector. Third is saying transport, communication, banking. Now this is your service sector. This is what? This is your service sector. So right answer will be your C option. Do make sure always whenever you study a question, whenever you try to understand the concept, focus on the understanding, है ना, like why this is in the primary sector, because these all are related to natural resources. Why this is related to secondary sector? Because they are all finished goods. We directly consume these goods. So this is the finished good. Third, transport, communication and banking. This is what? This is the service. You are not providing a physical product. Hai na? Let's say when I am being an educator here, so I am not providing you a physical product. I am giving you the service, that is the knowledge. And when I come to the bank, you are not providing me a physical product like this remote or this pen or something else. No. What you are doing? You are providing me the service. Hai. So that's why it is related to your tertiary sector. So right answer will be C. Achha, one more thing, in the last session we have discussed that the service sector contributes maximum to your economy. Hai na? Do remember that as well. Now, which of the following is not applicable for a worker who works in the organized sector? Now, these are the options in front of you. If you remember, if you know the answer, do let me know. Otherwise, I will give you the explanation. Read the option. Till then, I will give you the explanation. So first, we have primary, secondary and tertiary sector. CSO have divided the economy into these three sectors, that is primary, secondary and tertiary. And this is what we're talking about, the types of sectors in the economy. Apart from that, we have organized sector, we have unorganized sector, we have sunrise sector as well. Now let's first talk about the organized sector. Organized sector is a type of sector where you will find, where we are talking about, where you will find the first thing, that is your, all the things are predetermined. Organized sector workers, or if we talk about the organized sector, is a type of sector in which your job's terms and condition will be prefixed. Hana, when you join the job, in the offer letter, your key responsibility areas are already fixed, that this is your terms and condition, this is your policies, this is your rules, etc. So job's terms and condition will be fixed in the organized sector. Hana, like what I am doing, I belong to the organized sector. You belong to the organized sector as well. Because our job terms are confirmed. Our job terms are fixed. We will get in a year, let's say for example, in an organized sector, you will get a particular duration in which you will definitely get a percentage of increment. Third, you will get a proper holidays as well. You will get a paid leave as well. You will get a without pay leave as well. Apart from that, if you want to leave the job, if company wants to fire you, from both sides, 1 month notice period should be there, or it depends on the condition. But yes, notice period should be there. It's not like the company can say to you, do not come office from tomorrow because you are fired. That cannot be done. A proper notice period will be done. So it's a kind of security. You have a job security in the organized sector, and the unorganized sector is just opposite. No job terms are confirmed, no job security is there, no particular period of time in which you definitely get the increment. You can be fired anytime. There is no condition of a notice period or something else. So these are the two different sectors that provide the job to the people. If you belong to the organized sector, government laws will be followed, like the Factories Act, like the Minimum Wages Act, like Maternity Act, your etc. Other types of act as well will be implemented on your job, will be followed when they provide you the job, so that the labor exploitation should be not there. Apart from that, when you are working in the unorganized sector, so it's a kind of thing where the government laws, legislation will not follow. If you are looking for an example, the organized sector is the job which we both are doing. Like I am the part of the organized sector, you as well are the part of the organized sector, because we get all these benefits. In the unorganized sector, you can see the street vendors, your domestic help. They are what? They are not the part of organized sector. You don't give them the notice and then tell them, do not come to the office, do not come to work in my home after 1 month or something. There is no such period in which you will decide that every year you will give a minimum increment to them. There is no such kind of law on you. There is no such kind of legislation which tells you to do this. So that's the unorganized sector. I hope the organized and unorganized is clear to all of you. Now, these are the options. First is saying she gets a regular salary at the end of the month. Obviously, this is a part of organized sector. Fourth is saying she got an appointment letter stating the terms and conditions of work when she joins the work. As I have told you, in the offer letter, you will get the terms and condition. Your key responsibility area will be defined here. Now, third is saying she gets the medical allowances. Yes, we get the medical allowances. Your company provides you the certain insurance. Fourth, she is not paid for leave, and this is true. Hana, this is true. He, she is not paid for the leave. This is not a part of organized sector because we know we get a certain leave. Like you guys are getting PL, CL, ML, etc. That is what? This is the paid leave of yours. Na? Similarly, we as well get, or every company gives at least 12 leaves in a year. That will be a paid leaves. So right answer will be B. This is not a part of your organized sector. So right answer is B. Next. Next, we have marked the incorrect statement in relation to the topic difference between organized and unorganized sector. So you have, there are certain 3 statements. Out of these 3 you have to answer, which is the organized and unorganized difference is incorrect. Hana? So first is saying mark the incorrect statements in relation to the topic difference between organized and unorganized sector. First is saying the organized sector is a sector where the employment terms are fixed and regular and the employees get assured work. So you can see you are saying unorganized sector is the sector where employment terms are fixed and regular. So you can easily say this is wrong. Hana? In the employment sector you don't get the fixed and regular job in the unorganized sector. So this is the incorrect one statement. Second is saying workers enjoy the security of employment in the organized sector while under unorganized sector employment is not secure. This is so true. This is true about the difference. Third is saying organized sector is governed by various acts like Factories Act, Bonus Act, PF Act, Minimum Wages Act, etc. This is also true. Unorganized is not governed by any act, but the organized is governed. So right answer will be what? The right answer will be only, the question is asking incorrect statement. So incorrect is first, so right answer will be D. About the difference between both the sectors, you have D option, that is only first statement is your incorrect, otherwise all the other are correct. So right answer will be your D. Okay, next. Next revolution question is there, match the following. So these kind of match the followings will be there. Now you can understand this point, like if the statement based question are there, if these match the following questions are there, or whether they have given the filling the blanks in one paragraph, there are 2 or 3 filling the blanks. So it's very obvious until and unless you know about these 4 points, you won't be able to answer. Or in the question, if let's say for example in the statement based question, if you know first and second statement but you have not heard about the third statement, you won't be able to answer the question. So that's why the conceptual understanding is very important. Please make sure whenever whether you are doing a self study, whether you are going for a paid batch, do make sure there should be conceptual understanding. Now the question is asking match the following. So one side you got the revolution, other side it is talking about the product, father or period of the revolution. Now Acha, let me tell you how you can save your time with the elimination method or with the help of this method which I am going to tell you here. So we have yellow revolution, golden revolution, evergreen revolution, protein revolution. In the match the following, you can use this method. This will help you. But only use this method when you are 100% sure about the content. So I am 100% sure about the protein revolution because this is the latest revolution introduced by or coined by Mr. Narendra Modi. So I know the protein revolution definitely will have A, that is 2020 because this is the latest one. So I know protein revolution have the latest revolution coined by Mr. Narendra Modi and answer will be 2020. So now fourth should be A. Now let's eliminate the other options which do not match this following. So fourth is saying D. This cannot be true. Fourth is saying this cannot be true. Fourth is D. This cannot be true. So now I found the answer that D is the right answer because I am 100% sure the protein revolution is related to 2020. And this is how you do not have to go for the others also, because you have confirmed about it. Let's say in any of these 3 options, the 4 is given as a match. Then you have to check the others, because in here you have only one option, so right answer will be D. It means yellow revolution was introduced in the duration 86 to 90. Golden revolution was it was related to fruits, horticulture and honey. Evergreen revolution's father was Mr. M.S. Swaminathan. Okay, so this is how you can answer the question in the match the following case. Same can be used in the filling the blanks if you got the such kind of options. Good evening everyone, welcome to the official YouTube channel of Officer Study 24/7. How are you all of you? So first of all, let me know how are you all, and also those who have joined this session, do let me know is audio video both. Good evening everyone, welcome to go. So let's start in this particular session. Every day we are having one unit and we are discussing one unit in form of important MCQs. Important means the topics, or we can say the subtopics from a particular unit we are discussing here in form of your MCQ. Okay, so let's start the session, and before starting the session I will be your mentor for IE, IFS and PPB, and Monday to Saturday I am taking sessions for PPB as well as for IE, IFS. If you want to join these both sessions, in the morning 6 AM we are having PPB session, and in the evening 7 PM we are having IE, IFS session only on Offices at 24/7. And if you are the person who is watching this session for the first time, so I want to let you know that this is not our first class. This is our class number 4. We have already discussed the 3 units in this particular subject. And if you want to check the other videos, the recording is available only on Offices at 24/7. You can go to the playlist and you can find each and every session recorded available there. Okay, so let's start. Every day we are discussing one unit, and we are covering module A right now. So module A, class number 4, we are discussing in this particular session, and this is the Achiever series that we have started from 4th of December. So do join these sessions on the regular basis. Now let's start. What is today's topic? Let's discuss from there. So today's topic is role of priority sector in MSME in the Indian economy, and this is your unit number 4 in a module A. So as you know, module A covers total 11 units, and if I talk about the overall subject of your IE, IFS, it have 45 units. Out of 45 units, 19 units are there in module A and B. It means module A and B have a very small syllabus, but C and D have a huge syllabus, and C and D is a kind of unit that will take a lot of time of yours to prepare. Okay, so what we are doing here today, we are going to discuss about the priority sector and MSME, what their role or what their impact is there on the Indian economy. So let's start. Before moving forward to the questions, let's discuss certain things about the topic of yours. First of all, if I'm talking about priority sector, what is priority sector? Priority sectors are those sectors which, according to RBI as well as according to the government of the country, they are the sectors which need improvement, which need development. And this is the responsibility of the country to develop these sectors, because until and unless these sectors have been developed, we are not able to develop our economy. So in short, I can say if priority sectors are not developed, India will not become in the future the developed country. First, we have to start from the development of these sectors, and then only it's possible that we can reach to the place where we want our country to be developed. And if I'm talking about the economic growth, economic development, what actually these means? So economic growth, when the production of your country, or I can say the GDP of your country, is increasing, it means the maximum production, the maximum growth will be there in the country. But when it comes to the development, development is not a quantitative concept. It is quantitative as well as qualitative. You have to increase the production of your country, but with the help of the production of the country, you have to make the life of other people or life of the people who are in your country better. It means we have to provide the better livelihood to each and everyone. It's not only for the rural economy, it's for everyone, that we have to provide them a better livelihood in the country. And when we are able to do that, it will be economic development of ours. It means if your production is increasing, your job generation should increase, your per capita income should increase, your infrastructure development should increase, your literacy rate should increase, right? The living standard of people should increase. So all these are the things which shows you that there is a human welfare in your country. It means your country is growing. Clear? And when we want to do the economic development, we need to make the life of people good. And this can be done from the start to those people who are actually having a very bad livelihood. It means those who are not able to get the job, those who are under the below poverty line. They are the people who are only capable of purchasing wheat or rice at 2 rupees per kg or 3 rupees per kg. So if you want to develop your country, you have to develop these people, because these are the people who can have the jobs in the future, and they can help you out to being dependent by themselves, that the government do not have to spend more on the social welfare of the people. And when government is capable of saving the money from social welfare, then government will be able to create the better livelihood for the others. How it will be possible? By providing 24/7 all weather road connectivity to all the people. So this is how slowly we will be able to develop, and that's what the priority sector is actually for. We want to make each and every priority sector of our country to be better, and in which we have agriculture. If we talk about agriculture, still in 2023, if we talk about the agriculture, is the sector which provides us the maximum employment in the country, but not the earning, the maximum employment. Now what does it mean? It means maximum people are dependent on the agriculture sector, but they are not earning much money. So we have to develop the agriculture sector, so that those people who are dependent on agriculture, they will be earning good money. If they earn good money, they will be spending money on their literacy, on their livelihood, on their living standard. They will be building their house, or they will be developing our country. So this was the objective behind priority sector that was introduced by RBI and Government of India. And if I talk about the priority sector, it has 8 sectors in which RBI gives the target and the sub-target as per the sectors that have to be achieved by the banks, the country's bank. Okay. Now let's move to the MSME. What is MSME? Micro, small and medium enterprises. These are the enterprises that actually working in the country to help to increase the GDP. So we are providing a lot of support to the MSME. Like if you remember, CGT MSE was introduced, in which collateral free, third party guarantee free loan should be provided to MSME. And you are supporting this sector in such a way that they do not have to give the collateral, they do not have to give the guarantee, have to take the guarantee from the third party. They can simply take the loan, but there is a chances they can fraud more, because there is no liability on them. There is no collateral of there with you. There is no asset of them with you, or there is no other person who is taking the guarantee of there. So it means it becomes very easy to fraud for them. So why government is doing that? So that we will be able to develop the micro, small and medium enterprises, because these are the enterprises which are helping us to increase our GDP. These are the enterprises which are increasing our production. These are the enterprises which are increasing our exports. These are the enterprises which are helping us for the import substitution. It means we are becoming self-reliant with the help of MSME. And that's why it is very important to develop these enterprises as well as the priority sector to make India self-reliant, or to make India developed. Clear? So this was the gist about the particular priority sector in MSME. Now let's move forward to the questions, and we will be discussing about the subject or the topic of your exam. So the first question, before starting with the first question, I want each and everyone to be very active in the session. Keep answering the questions. If you do not know, just try to answer the question by whatever you know about the particular topic. And if it is wrong, we will be able to correct it. Be active, and in the end of the session, do make sure you put a comment there in the video that how many answers you have given correct, so that we will be able to analyze our preparation. Clear? So let's just start. What does CEOBE stand for? So if I am talking about CEOBE, what actually it is, I will let you know. Till then, you can tell me the full form of this particular term. Now, whenever we are talking about priority sector, so RBI have introduced the priority sector lending, in which banks have to provide a certain percentage of A and BC or CEOBE, whichever is higher, So RBI has given the target to all the commercial bank, all the foreign banks, or all the small finance bank, RRB, etc., that you have to provide loan to the particular priority sector as a percentage of A and B, C or CEOBE. Out of these two values, whichever value is higher, that percentage of loan should be provided to the PSL. Now, what is A and BC? It is stand for adjusted net bank credit. The money that have been adjusted by the bank to provide credit, that is known as adjusted net bank credit. Clear? Now, if I am talking about CEOBE, CEOBE stand for what? It is credit equivalent of off-balance sheet exposure. It means right answer is A. Now, when I talk about CEOBE, it do not covers or it do not include the assets and liabilities of the bank. Assets means the loan and advances bank is providing. Liability means the deposits bank is accepting. So these two values, the assets and liabilities of bank, will not be covered under the CEOBE. CEOBE covers whatever a bank is earning from the fee income, or we can say the money that bank generate by taking the fee. Like when bank is issuing bank guarantee, when bank is providing letter of credit, bank charge a certain commission, bank charge a certain fee, and that fee income is a part of your CEOBE. Clear? So CEOBE is simply a income that bank generate as a fee or the commission. And if I talk about adjusted net bank credit, it is the amount of money that bank adjusted after maintaining all the reserves, to provide the loan. That's why it says adjusted net bank credit. The money bank adjusted to provide the credit. Clear? So the right answer will be A. And what is A and BC CEOBE? I have told you here. So do check these also. Now, next, so right answer will be A. Second question. As per RBI guidelines, what is the priority sector lending target for small finance bank? So as per the RBI's guidelines, what is the priority sector lending target for the small finance bank? And these are the options in front of you. So target and sub-targets you have to remember for all the banks. They are very important. Is it 40%, 75%, 51% or 18%? First of all, if I'm talking about a small finance bank, these are the differentiated types of bank, or we can name them differentiated bank, that was introduced by RBI in 2015 for the purpose of financial inclusion. Okay. And when I talk about here small finance bank, what actually it is? They have to provide 75% of A and BC or CEOBE, whichever is higher in the priority sector. This is the total target that RBI has given to the small finance bank to provide under the PSL. Out of the 75, then we will have a sub-targets. Okay. So this is the total PSL loan that small finance bank have to provide. So it is B option. Now, what is the target percentage of A and BC or CEOBE? Is prescribed by RBI for PSL under agriculture sector for scheduled commercial bank. Now you have to answer what is the target percentage of these two that RBI have prescribed under the agriculture. For which bank? For the scheduled commercial bank. Achha, one thing I want to tell you here before moving forward to the question, like to provide PSL target. RBI provides PSL target, and when RBI provide PSL target, RBI has divided the banks into two categories. That was, first we have domestic banks, like to provide the PSL target, RBI has categorized the bank into two categories, that is domestic bank and foreign bank. Now foreign bank have only two categories further, that is those banks which have 20 or more than 20 branches. And what are the foreign banks? Simply the banks which have their headquarters in foreign country and they only have branches in India. That bank is known as your foreign banks. Okay. Now 20 and more branches bank will be the first category, and the other category less than 20 branches in India. So these are the two categories of your foreign bank. Now the domestic bank have divided into three categories mainly. That first covers commercial bank, that's the scheduled commercial bank you can call it. And the scheduled commercial bank covers public sector bank and private sector bank. So under commercial bank we have public sector and private sector bank. Then we have regional rural banks, then we have a small finance bank. And as a domestic bank, we also have a cooperative bank who have target of PSL. So this is how RBI have categorized the banks to provide PSL target to them. Okay, and the banks have to fulfill these PSL target annually. Now the question is asking, what is the target for agriculture sector? If I'm talking about agriculture sector target, it is same for all types of bank, whether they are public sector bank, private sector bank, small finance bank, RRB. They all have a same target of 18% for the agriculture sector. Clear? Out of this 18%, 10% will go to the small and marginal farmers. That we will discuss further. So right answer will be 18. All the banks have to provide 18% to the agriculture sector. All the banks, except the foreign banks which have less than 20 branches. So right answer is A. Next question we have, what is the target for weaker section of society to be achieved by regional rural bank? The target for weaker section of society achieved by the RRBs. And we have these options. First, 18%, 12%, 40%, 15%. RRBs, weaker section. And RRBs have 15% target, all the rest banks have 12% target. In weaker section, only RRB have the different target, otherwise all banks have the same target, that is 12%. Okay, so here right answer will be your D option. Do remember these targets, they are very important. Now, what is the target for weaker section of society? Weaker section of society to be achieved by the scheduled commercial bank. So I have just told you, only RRB have 15% target for weaker section. All the other banks have 12%. So right answer will be B. Scheduled commercial bank, public, private, then your small finance bank. They have a 12% target for the weaker section. So right answer will be your B. Next question. What is the target for micro enterprises to be achieved by scheduled commercial bank? The target for micro enterprises to be achieved by scheduled commercial bank. And we have these options. Micro enterprises target for all the banks are same, whether it is public sector, private sector, small finance bank, RRB, foreign banks for more than 20 or more than 20 branches, they all have same target for micro enterprises, and that is 7.5%. So your right answer will be here, D option. Okay, now, what is the land holding for farmers to be considered as small farmers? So what land holding for farmers is there to be considered as the small farmers? So as I have told you, in the agriculture subsector is there. Out of, like all the banks have same target of agriculture, that is 18%. Out of 18%, 10% should go to the small and marginal farmer. Now it is very important to know who are known as the small farmer and who are known as the marginal farmer. I guess you all know about this because you are actually selling the government schemes, Fasal Bima Yojana, Kisan Credit Card. So you know what land holding should be there to become the small farmer or to become the marginal farmer. In case of a small farmer, it should be more than 1 hectare and up to 2 hectare. And in case of marginal farmers, it should be up to 1 hectare. Okay, so do remember the land holding of marginal farmers as well as the small farmers. Next, C answer is there. What is the target for micro enterprises to be achieved by small finance bank? What is the target for micro enterprises to be achieved by the small finance bank? Micro enterprises target, I have just told you, it is same for all the banks and it is 7.5%. The agriculture target for all the banks are same, 18%. The micro enterprises target is same for all the banks, that is 7.5%. And in case of weaker section, only RRB have 15%, all the other banks have 12%. Okay, so right answer here will be the option. Now, as per the definition, the new definition. So the new definition of MSME have been given in 2020 by the government, by the Ministry of MSME. Investment in plant, equipment or machinery and the turnover. The first criteria to decide which enterprise is micro, small or medium, the first category will be criteria will be on the basis of investment. Investment should be done, investment done in the plant, machinery or equipment. And the second one is turnover. Okay, it means on the basis of investment, value and the turnover value, it will be decided that which enterprises, micro, small and medium. So MSME stand for micro, small and medium enterprises. So this is how it have been defined. In case of investment in plant, equipment or machinery by the micro enterprises, it should not exceed 1 crore. And that's what your answer is. That is B. So question is asking, as per the new definition of MSME, investment in plant and machinery or equipment does not exceed dash for a micro enterprise. So micro enterprise can invest in plant, machinery or equipment up to 1 crore, not more than that. Does not exceed. Okay. Now the turnover of theirs does not exceed 5 crore. Every value I am writing here, it does not exceed before that value. Like the investment does not exceed 1 crore. The turnover does not exceed 5 crore in micro enterprises. In small enterprises, or I can say your small enterprises, you have to have here 10 crore. Does not exceed 10 crore, and here it should be does not exceed 50 crores. For the medium enterprises, does not exceed 50 crores, or here it will be does not exceed 250 crores. So it is simply multiplied by 5. Hana? This is what the new definition is. That on the basis of 2 criteria, investment and turnover, your definition have been defined. Do remember these data. Okay. Apart from that, one more change is there. Earlier, we used to have the definition for micro, small, medium enterprises, that is service sector different and manufacturing sector different. But now the both sector have the same definition, which is written in front of you. Okay. So right answer will be your B option, and do remember this. This is very important. Right answer is B. Okay. Next. Which among the following is not a priority sector? So priority sector have 8 sectors, and IT is not one of them. Social infrastructure, agriculture, MSME. Then we have education. Then we have housing. We have export credit. Okay. Then we have renewable energy. Then we have others. So this is what actually the sectors of PSL is. Okay, which is do not cover information technology. So right answer will be your A. It's not a part of priority sector. Good evening everyone, welcome to the official YouTube channel of Officer Study 24/7. So how are you all? Let me know. So those candidates who have joined us here, let me know how are you all, and audio video both are okay or not, let me know. So let's start the session. In this particular session, we will be discussing about IFS. So as you know, we have already started the Achiever series, and we have also started the Achievers batch. So from 8th of December, I and Vishal sir, we both have started your new Achievers batch for May 2024, in which IFS orientation class happen on Saturday, and the next class will be on Monday. That will be your first demo session. It will be available on Office Study 24/7 YouTube channel as well. And from Tuesday onwards, you will not be able to see any demo on the YouTube, and that will be in the paid classes only. So if you're thinking about enrolling in a particular paid batch and you want to check the demo for the same, you can check on Officer Study 24/7 on Monday 9 to 10 p.m. Okay, that's the Achievers batch we have launched. So let's just start. As you all know, we have started the Achiever series. Every day we are discussing one particular question, particular module of you from each and every unit perspective. It means every day we are covering one particular topic of all the topics of your module A. So right now we are covering module A, then we will cover the module B, then C and D. This is how we are going to cover all the 4 modules of your every day by covering one particular unit. Okay, so this is what we're talking about your today's session. And every day, as I have tell you, like what topic we are going to discuss today. So today's topic is your globalization impact on India, and that's the unit number 6 of module A. Now, before moving towards the session, first of all, these sessions for IFS English Medium will be available Monday to Saturday only on Officer Study 24/7 in the evening at 7 p.m. Okay, so these sessions will be available at 7 p.m. Monday to Saturday. If you haven't seen the earlier sessions or the last 5 sessions, if you haven't seen them, do check the playlist. You will find the playlist, and there you will find each and every session recording as well. Okay, so let's just start. So today's session is globalization. So before discussing questions and before moving towards the globalization topic, let's discuss first something about economic reforms, because globalization came from the economic reforms only. So if I'm talking about economic reforms, the last economic reform or the new economic policy of our country was introduced in 1991. That was the LPG, liberalization, privatization, globalization. When we talk about liberalization, it means what? Liberalization means to remove rules, regulations, restrictions. Privatization means to transfer the ownership of public enterprises to the private enterprises. It means government's ownership will be transferred to the private ownership. And the globalization means to link your Indian economy with the world economies. It means we are starting the dependency on the foreign market, because in the globalization we have started to do export and import with all the countries. Okay, so this is the LPG. But now why we have introduced this LPG policy? What was the reason? And the reason, there were a lot of reasons. Some reasons we are discussing here. The first, on the government of India, there were a lot of borrowings burden. So as we know, every year government makes a budget in which government estimates what will be the earning of the government for the particular financial year and where the government have to spend that money. We discussed this. But when we talk about government's budget, every year we face the deficit budget. Deficit budget means every year the expenditure of government will be more comparative to the revenue of the government, and that's why government have to borrow money for the development of the country. And because we are developing country, that's why every year we face the deficit budget. And when the government borrows money, we have a lot of sources from where the government can borrow money. Government can borrow money from RBI, government can borrow money from the international organization, government can borrow money from the foreign countries, government can raise capital by issuing the government securities. So these are the ways from where the government earns money, or not the earns money, but take money from or borrow money from the market. Now, after taking all these sources to raise the capital so that the country's development will not stop in a particular financial year, in the year 1991, we have seen that government was in the major burden of the borrowings, and government was not capable at that point of time to repay those loans from whomever the government have taken. So the first reason why we have introduced the LPG policy or economic reform was your fiscal deficit, the burden on government of India of the borrowing. The second major reason was inflation was rising. Inflation is what? It is rise in the prices of goods and services. When the prices of goods and services are keep rising, that is known as inflation, and that was happening in that financial year 1990-1991. And we have seen that government of India was not, or government of India and RBI, they both were unable to control the inflation from that at that time. So this was one of the reasons. Apart from that, we have already faced balance of payment crisis. Now, what is balance of payment crisis? It means whatever transaction India is happening with the other countries, with the rest of the world, in those transactions, we have faced that the government, or we can say the country, was earning less amount of money and was spending more amount of money in the foreign markets. So the outflows were more than the inflows in the balance of payment. Okay, the outflows were more from the inflow in the balance of payment. So that's why balance of payment became adverse or negative, or it was the balance of payment crisis. After that, we have seen Gulf War was there. Because of the Gulf War, crude oil prices was continuously rising, and it created a certain inflation in the country. It is one of the reasons why inflation was there, because India is a kind of country which imports major part of its crude oil. And that time was the same, and still in the present we also dependent for the crude oil on the foreign market. And because of this, a lot of foreign currency or lot of outflow from India have been seen. And because of this Gulf War, India's foreign currency was reducing, and India's foreign currency was remained only for 2 weeks. It means for 14 days. So it have been said that after 14 days, we will not be able to pay our import bills. It means we will not be able to purchase the crude oil. And if you are not able to purchase the crude oil, how you will run your country? So this was one of the reasons that foreign currency reserves were falling. And then we have seen public sector undertakings were not performing well. They were not having financial help from the side of the government. They were not able to generate the jobs. They were not able to produce the goods and services. They were not able to provide salary to their employees. So all these situations have been seen, all these problems have been seen in the Indian economy from 1990 to 91. And after facing all these issues, then in the last, it means the country's government went to the World Bank and IMF for asking the help. And when we went to the World Bank and IMF for asking help so that we do not have to be known as a bankrupt country, so they have put a condition in front of the government that if you want us to help you, we are definitely there for you, but you have to introduce the reforms in the economy. And those reforms have been named as economic reforms. So IMF and World Bank said that we know if we provide India a loan right now without any condition, after 10 years, India will stay at the same position, because not only they are using their resources, but also they are not letting others to use their resources. So that's why they said that if you want us to help you, you have to introduce the economic reforms. And that's why we have introduced the LPG policy. Clear? Now, first one, we have liberalization. Now, what is liberalization? Liberalization simply means to remove rules, regulation, restriction. License, permit, quota raj have been removed. Then privatization, the public ownership transfer to the private sector. And globalization, we have made economy open for all the export imports from the country. It means we have linked Indian economy with the world economy. Okay, so this is the economic reforms. And because of the removing rules, regulations, restriction, and because allowing the private sector to work in the country, we have seen the evolution of globalization. Now the MNCs are ready to come to India. They wanted to come to India, then start their business here. They wanted to invest their money in the country. Because as a consumer market, if we see, India is the biggest consumer market. And right now in 2023, if we talk about, we are most populated country in the world. We have left China behind. So it means as from the side of the consumer market, India have a big opportunities. So the companies wanted to invest in India, and because of the liberalization, privatization, they were able to come to India, and that's where the globalization has started rising. Clear? Now, this was all the introduction of the chapter. Now, let's move to the questions. And I want each and every one of you to be active in the session, keep answering the questions here. And as well, apart from this, do let me know in the comment section how many answers you have given correct after each and every session of you. Okay, so let's start. So first we have here that is talking about which among the following statement is not true for globalization. The statement not true for globalization is, first is saying workers were denied for their rights because labor law were not implemented. Second is saying it helped in creating several jobs in the service sector. Third is saying people having implemented. Second is saying it helped in creating jobs. Okay, third is saying here that people having wealth, skills, education were not benefited from globalization. Globalization has unequal benefits. So if we talk about the globalization, so the fourth statement is totally true. Reason? Because actually globalization have unequal benefits. Because of the globalization, we have allowed that MNCs can come to India and start their own business. But what happened here in the globalization, we have seen the companies are coming to India. They want to be in the urban areas. They want to be in the metro cities, but they do not want to involve in the rural area. So that's why unequal benefits was there. And the second one is also true. The service sector got the several job opportunities, and if any sector got maximum benefit out of the globalization, that's the service sector. Okay, and the least benefited sector is agriculture sector. So second is true. First is saying workers were denied for their rights because the labor law were not implemented. This is also true. But this is not true that people having the wealth, skills and education were not benefited from the globalization. Everyone got benefit from the globalization, but only the difference is some got more benefit, some got the less benefit. So right answer here is C. Okay, next. Which among the following is not a benefit of your globalization? Not a benefit of your globalization. So we know globalization is simply to link Indian economy with the world economies. First is saying you will get the technical advancement because the technology transfer is there. Job creation, political stability, economic development. So out of these four, according to you, which of the following is not a benefit? So it's very obvious you will get technical advancement, you will get the better jobs and the jobs more opportunities, and economic development will be there, but not the political stability. Globalization cannot control our country's government. So it means political stability is not a one of the benefit of your globalization. Okay, just give me a minute. So right answer will be your C. Next question we have here that is asking that globalization helps in ensuring various economic and social benefit to. So it is providing various economic and social benefit to whom? Laborers, consumers or producers? So laborers, producers, consumers, who are getting the maximum or who are getting the economic and social benefit because of the globalization? And the answer will be all are getting this benefit. Hana, answer is all the three are getting benefit out of your globalization. Okay. Now, next question we have, globalization caused dash. First, easy movement of goods, capital, services. Second, increasing the international trade. Third, companies easily operating in various countries. So what do you think, which of the following is the globalization caused? So if we talk about because of the globalization, it's very obvious the international trade increased because the globalization have given us the authority to perform export import, and globalization made Indian economy an open economy. So second is true. The easy movement of goods, capital and services, this is also true. After the globalization we are able to perform this. Companies easily operating in various countries, this is also true. It means all are the correct answer or all are the causes that have been seen because of the globalization. So right answer is D. Now, next is asking here, which among the following is not a protectionism measure? So, first of all, when we talk about globalization, a lot of benefits are there because of the globalization we have faced, but there is also disadvantages. There is advantages, but also some disadvantages are there. Because of the globalization, a lot of Indian businessmen are facing loss. Their businesses are not going well. They are not able to increase their customer base, and apart from they are losing their customer base because now people are approaching to the MNCs, people are approaching to the foreign brands. So your domestic businessmen are facing loss, and in this situation, what should be done? So WTO said, that is World Trade Organization, like if because of the globalization, any country's government feels like that this is not in the national interest, whatever happening because of the globalization, whatever the impact of globalization, if the government of the country feels that this is not right for the nation's interest, then you can have your own measures, you can implement your own measures to make it right for your country. And those measures that Indian government have taken, that named as a protectionism measure. Okay, and what actually we are trying to do, we are trying to save ourselves from the globalization's disadvantage. We are first trying to remove the dependency on the foreign market. So what happened in the globalization? We started interaction between the countries. We have allowed the cross-border transaction of goods and services, of knowledge, of skills, of culture, of people, everything, of resources, everything. We started doing cross-border transaction. Now we are restricting this cross-border transaction, and this process is known as deglobalization. When you are decreasing your dependency, when you are decreasing your interaction from the foreign market, that is known as deglobalization. And how to do that? With the help of protectionism measure. And there are three measures that will be taken. Increase tariff barriers, like taxes, duties, etc. you have to increase. Import quotas, put certain quota limits on the imports. Then non-tariff barriers. Non-tariff barriers means rules, regulation, restriction can be put. Like if you want to come to India, you have to take permission from 3 ministries and then from the 3 next departments of a ministry. So it will become more kind of task for the MNCs to come to India and take a permission from different department. So that's the non-tariff barrier. So all these are the protectionism measure, but not the fourth one, that is talking about increased capital account convertibility. Okay, so right answer is D. Next, which sector experienced the least profit due to the effect of globalization? Achha, I have just answered this question. I have already answered this question. So the maximum profit have been seen in the tertiary sector and the least profit have been seen in the agriculture. Okay, now, so right answer is C. Next, we have opening and improving the economy with other major economies to take it to the international level is known as privatization, liberalization, globalization, none of the above. So when you open up you are opening your economy, you are improving your economy. Hana, with what? With the major economies. That is what it is to the international level. Hana, you are doing. So that's obviously a globalization because you are opening your economy. Hana, you are improving your economy to with the other economies at the international trade. Hana, international level. So that's the globalization. Next, the process of reducing dependency and integration amongst particular units throughout the world is. So if you are removing or not removing, actually reducing the dependency on the foreign market, removing the reducing the dependency on the international market on the other countries, what actually this process is known as, and I have told you this process is known as deglobalization, right? This process is known as what? Deglobalization. So right answer will be D. So reducing your dependency, reducing your integration, that is your deglobalization. Now, what are the benefits of globalization? Out of these, what is the benefit of globalization? Use of innovation and technology, low production cost, get access to various new cultures. So which of the following is the benefit of globalization? And the right answer for that you will find is all of the above. You are getting low production cost, you are getting various access to the various cultures, you are getting innovations of technology as well. So all are the benefits of the globalization. All these will be seen because of the globalization. Now next, what are the challenges of globalization? The challenges we are facing in the globalization. First is saying the exploitation of foreign workers. Second is saying difficulty in the expansion of MNCs. Third is saying high charges and export taxes. So out of these three, what do you think? What are the challenges of globalization? A, B, C or D? Okay, so first it's very obvious the foreign workers will be exploitation can be there. And these are the challenges we can face when you are going to the other country. And difficulty in the expansion of MNCs will be seen. You will see the high charges and export taxes. This is also one of the challenge, like you came to India, let's say foreign company came to India to start their business. But when they are exporting goods and services, the government policies have been changed and the government is implementing more taxes now. So it's very obvious it's a challenge for the MNCs. So right answer is D. Good evening everyone, welcome to the official YouTube channel of Officers Adda 24/7. So first of all, those candidates who have joined us here in this particular session, do let me know how are you all, and let's start the session. What actually we are doing in this particular session, I will let you know. First of all, this is our Achiever series, and this time 7 p.m. is book for your IFS Achiever series, in which we are discussing one particular topic every day in form of important MCQ. So if you haven't seen these sessions, first of all, do check all the sessions which are available in the playlist. You can watch in the recorded form. And do make sure from now onwards you join at 7 p.m. for IEIFS and 6 a.m. for PPB. So I will be your mentor for IEIFS and PPB, both the subject for your JAIIB. And we here are preparing for your JAIIB May 2024 paper. Okay, so let's start the session. So this is our Achiever series, and today we are going to discuss the class number 7. In class number 7, module A we are discussing, and the topic that is there in the class number 7 is economic reforms. So module A, unit number 7 it is the economic reform. The total modules you have 4, and total units you have 45, out of which 11 units you will find in your module A. Out of that we are discussing 7. So you can see we are going to complete module A in next 4 days. Okay, so do make sure you have checked all the sessions. That is very much important. Now let's start the session. Now today we are going to talk about the economic reform. So as usual, first we will discuss about this particular topic, and then we will move towards the MCQs, so that you will be able to link the content with the MCQs. Okay, so let's start. Now when we talk about the economic reforms, in the globalization chapter I have already talked about economic reforms with all of you, in which we have discussed what is liberalization, what is privatization, what is globalization, what are the different aspects we have seen, advantages, disadvantages about globalization we have discussed. In this particular session, we are going to discuss about all the economic reforms. So as I have told you in the last session, unit number 6, globalization, that why we have introduced economic reform, because there are 6 to 7 problems which India was facing. Out of them, we have seen that fiscal deficit was increasing in the country. It means the burden on government of India of borrowing was increasing, and government was not capable at that time to repay that borrowing, repay that loan. Second, we have seen that the country was facing extremely high inflation, and that was at the warning stage. So we were facing inflation at the warning stage. That was another issue we were facing. The third we have faced was here the increase in the increase in the outflow from the country. It means in the balance of payment, the outflow was more in comparison to the inflow, and because of that the balance of payment crisis have been seen. And because there was balance of payment crisis, the other things was also there, like we were seeing that regularly the foreign exchange reserve was declining, it was falling in the country. Regularly we were seeing that the foreign exchange reserve is falling from the country. It means we have seen that we only have 14 days foreign exchange reserves. After 14 days we will not be able to repay our, or not repay, to pay our import bills. So this was the major issue we were facing. After this, we have also seen that the public sector undertaking were facing a very difficult time for providing job opportunities in the country or providing salary to its employee. Apart from that, there was also an issue that we were facing at that time, that our gold reserve was also declining, because while we were taking loan from the World Bank or other institution, we have to give something in the security, and the gold reserve was used for that purpose. And all of these came together, and that's why Indian economy was facing a crisis in the economy, and that's why Indian economy, or I can say the Indian government, went to World Bank and IMF for the help. And there they have put a certain condition in front of the government that yes, India will get loan or will get help from us, but they have to introduce the new economic policy. They have to reform their economic policy, because according to World Bank and IMF, whatever economic policy India was using, that was not sufficient for India to grow in the next 15 or 10 years. So that's why, because if we talk about IMF, it is International Monetary Fund. It provides loan to the member countries in case of economic crisis, in case of your balance of payment crisis, as well as it provides ideas, suggestions to the government of your country, in which, or the central bank of your country, in which IMF makes sure that the country will not face any kind of instability in the economy. And that's what we have seen. That was we were doing at that time. So IMF have seen the study, have done the study on the Indian economic policy, and said, if we are going to help you out. You have to change your economic policy, because IMF knew that if we will give loan India today, after 10 to 15 years, India will be at the same situation and won't be able to return our money. So that's why the economic reform have to be introduced. That was the suggestion of IMF. And as we had no choice, we have introduced the economic reform. That was the LPG. So LPG stands for liberal. I know you all know about the LPG. We have discussed a lot of time. Liberalization, privatization, globalization. Liberalization means to liberal the rules and regulations and restrictions from the certain different sector of the country. Apart from that, liberalization made the license, permit and quota Raj a thing of past. It means some times ago it used to happen in the country. The second, privatization, means when you transfer the ownership, the management, the control from government to private sector. It can be partial transfer, it means 50%, 49%, 70%, whatever. Or it can be fully transfer, it means 100% ownership, management and control. So this transfer from public ownership to the private ownership is known as privatization. And because of the privatization, India became mixed economy, because government and private sector both are working together in the country. Third, we have our globalization. Now, what actually the globalization is? Globalization simply to link Indian economy with the world economies. We started linking Indian economy with the world economies, in which we have seen that the government have provided the permission to do export and import from India to abroad. It means kind of economy we have seen India to build, that there is no restriction in the export and import of the country. And because of this, India right now is known as an open economy, because we have provided permission to do export and import. And this is the LPG, this is the economic reform. It's not like when we have introduced the LPG policy or economic reform, India got only benefited out of it. No, a lot of disadvantages are there, as in globalization chapter. If you remember in the last session, I have discussed with all of you, the globalization somehow was affecting the Indian economy. And that's where the WTO said that if you think that these rules and regulations or the globalization is not good for your national interest, you can introduce your own measures to control these kind of things. And then India introduced the protectionism measure. Okay, and if you know what are those three protectionism measure that we have discussed in the last class, do let me know in the comment section. Okay, that's a kind of homework for you, I can say. So in the comment section, let me know the 3 protectionism measure that India was introduced to reduce the disadvantages from the globalization. Okay, so that you have to answer. So let's start. This is our introduction of the chapter. Now let's start with the form of MCQ. Before starting here, do also make sure that you are being active in each and every session and keep answering whatever you think is the right option in your comment section. Okay, or in the end, do let me know what score you have got in this particular session. So let's start with the first question, that is asking about what were the reason for introducing economic reforms in 1991. Why we have introduced economic reform in 1991? The reason it is asking. First is saying the Gulf War, second is saying the negative balance of payment, third is saying increase in fiscal deficit. So out of these 3 reasons, what you guys think? Which of the following is the reason for your economic reform introduction? So I've told you there was an increase in fiscal deficit, there was a balance of payment crisis, it means negative balance of payment, and there was a Gulf War. Because of that, the crude oil was becoming costlier for the country, imports became costlier for the country, and somehow we were not able to maintain our foreign reserves. So right answer is all of the above. It means D is the reason why we have introduced the economic reform. Okay, next question. Next question is asking about the the process of transferring the ownership, management, control of a public sector partially, entirely to the private sector is known as. I guess I have told you about this already. Hana? The process where you transfer the ownership, the management, the control of your public sector undertaking to the private sector. It is known as what? Globalization, liberalization, privatization, and or none of the above. So I guess that's a very simple question. Right answer is privatization. Okay, right answer is your privatization. Next question we have, which is not one of the primary pillars of 1991 economic reforms. Not a primary pillar. So 1991 economic reform, you can call it economic reform, you can call it new economic policy, you can call it LPG policy, you can call it free market economy, whatever you want to call it, all these are the same. And which of the following is not a part of your economic reform? That is automation. Liberalization, privatization, globalization is there, but not the automation. Very simple question. Again, one of the simple question, which of the following concept was not a part of your economic reform under the new economic policy 1991? Centralization, liberalization, globalization, privatization. So which of the following is not a part of economic reforms? So economic reforms, we have seen a lot of economic reforms reasons, and what economic reform we have seen, that also LPG, out of which centralization is not a part. Centralization is a kind of power in which, or kind of method of doing economic planning in the country, that used to be done by planning commission. So in the planning commission, what used to happen, top to bottom model was introduced. At the top, central used to make planning, and all the state and union territory have to follow their planning. And state and union territories, they do not have any kind of option that they can give their suggestions, or apart from that, they can give any kind of feedback to these kinds of things. There was nothing like that. So they just have to follow the rules or the policy that the central government had made, and that's what is known as your centralization power. And what Niti Aayog is doing, that's a decentralization. Why? Because the states and union territories heads are the member of governing council. They tells the central what they tells the Niti Aayog what they are looking for. Accordingly, the plan will be made. So bottom to top level, it is the planning of Niti Aayog now. Which of the following has occurred in India after its liberalization economic policy 1991? So which of the following situation have been seen in India after LPG? First is saying share of agriculture in GDP increase, share of India's export in the world increase, FDI inflow increase, India's foreign exchange reserve increase. So what do you think, which of the following is correct? The situation that we have seen, the situation that we have seen in India, share of agriculture in GDP increase, this is, see, if we are talking about after liberalization, what we have seen, so this is very true, FDI was increased. And in the globalization chapter, I have told you that because of the inflow of the capital, maximum ownership, not the ownership, but maximum benefit have been seen in the which sector? In the service sector. And the least benefit was agriculture sector. So agriculture share was reducing, not increasing. So this is not true. FDI inflow is true, foreign exchange was true because the export was increased, and that's why the right answer will be your second, third and fourth, and the option number B will be correct. Option number B will be correct. Okay. Now next, Narasimhan Committee on Financial Sector Reform is related to which sector? So we are talking about Narasimhan Committee. This is a very important committee. Definitely the question will be seen from this committee. First of all, Narasimhan Committee 1 and 2 you have to study in your module C, unit number 1. That is Indian financial system. Okay, that you have to cover. Now, if you're talking about Narasimhan Committee on Financial Sector Reform, it is related to which sector? It is related to banking sector. A lot of reforms in there. Here you are just reading what was the sector for which the Narasimhan Committee have given the recommendation. So a lot of recommendation have been given by Narasimhan Committee. And the second thing you can see that a lot of recommendation have been accepted by government. So whatever the recommendation have been given, they have been started in a certain measures by the government. So right answer is your banking sector reform have been given. Like one of the reforms recommendation it has given that do decrease the CRR and SLR, do increase more supervision on the commercial banking system, do introduce the private sector banks so that they will be able to have a healthy competition. All these kind of things have been introduced. So right answer is B. Next. What was the primary outcome of liberalization and privatization initiative under the new economic policy in 1991 followed by the Indian government? So you have to answer here, what was the primary, what was the primary outcome? So you know, because of the liberalization, a lot of rules, regulations have been removed. Okay. Second thing, because of the privatization, we have allowed private company to work in the country. So because of these two, what have been the initiative that have been there? That is globalization. Because of that, we have find out the globalization have been done in the country. So right answer is your B. Next. Which of the following arguments are made in favor of privatization of a country's economy? The argument made in favor of privatization of country's economy. It helps to revive sick public sector unit. It creates a competitive environment for businesses. It helps to protect the sovereignty of consumer. So what do you think? What was the reason why we have done the privatization? Like if we talk about the present, if a government allows that this company will be private, going to the privatization, or government is doing privatization of the banks, this creates a very bad image of the government. Like it means government is not capable of running its own companies. So it is giving that companies to the private sector, and that's true. That's what the government do. And this is the best way to revive the particular public sector unit. This is true. And that's why the privatization have been done or have been allowed. It creates a competitive environment. That is also true. It helps to protect the consumer sovereignty. That is also true. It means right answer is D. So all the points that have been given here was in the favor that yes, we should do the privatization in the country, and that's why we did the privatization. Okay, because at that time government was not actually capable, because it do not have the capital to run these sick units or to give employment to the country or to make sure that the work should be done on a time. That was not there in the country. That's why the private sector was allowed to come into the business. Now next, what is the full form of LQP system that existed before onset of the new economic policy? So earlier, to start any business, the certain restrictions used to be there. To start any business, the certain restriction used to be there in the country, and because of that, the liberalization process have been done, and the liberalization had made the rules, regulation, restrictions easy. Now it is easy to start your business in the country. Now it's easy to work in the country. So now you have to answer LQP system that used to be there. It used to be a thing of past now. That was removed because of the liberalization. It was what? And the right answer for this will be your license, quota and permit. So now the license, quota and permit Raj became a thing of past in India because of the new economic policy. So right answer will be your A. Before starting business in India, we used to have the license from the certain department. You have to take permission and they will give you the license. Then the quota have to be given. Like once you have got the license, after that they will ask you that this is the quota for you. This is how much you can produce. This is how much you can do. So quota Raj was there. Permit Raj was there. After taking license, you have to take the permit as well. So this became a thing of past now. So right answer is A. Okay, one second. Now, next question is asking which of the following was not a part of the structural adjustment program under the new economic policy. Not a part of, you have to answer. Which of the following was not a part of structural adjustment program? Fiscal reform, tax reform, balance of payment adjustment, industrial reform. A, B, C or D. And the right answer will be here. It was not including the balance of payment adjustment. So which of the following was not a part of a structural adjustment program under NEP? It was balance of payment adjustment. Okay, right answer is C. Good evening everyone, welcome to the official YouTube channel of Officers at 24/7. How are you all? So welcome to the channel again, and those who have joined us here, do let me know as audio video both are okay, are we good to go? And let's start the session. In this particular session, we are going to talk about your IFS. As you know, we have already started the Achiever series from 4th of December, and this is your 8th class. It means we have discussed 7 sessions in which we have completed 7 units of your module A. So every day we are discussing one particular unit of your IFS subject at 7 p.m. only on Officers at 24/7 Monday to Saturday. So do not forget to join these sessions on the regular basis. Okay, and if you haven't seen any previous sessions, then do not worry about it, because all the sessions are available in the recorded form in the playlist. So you have to just go to the Officers at 24/7 channel, go to the playlist, you will find the playlist, and from there you can check each and every session's recording. Okay, so do make sure you check that, and in any particular session, if you find any doubt, you can ask in the comment section, because I regularly check the comments of the sessions, and if you have any doubt, I will let you know. I will make sure that your doubt will be clear there. Okay, so let's start. So as you can see, this is your 8th class of IFS, in which every day I tell you what topic we are going to discuss. So first of all, if you talk about the IFS subject, you have 4 modules, and these module covers 45 units. Out of 45 units, your module A cover 11 units, and from out of 11 units, today we are going to cover the 8th unit. Okay, so do make sure you check the previous session as well. Now, today's topic will be your foreign trade policy, foreign investment and economic development. This is your unit number 8, module number A. That's what we are going to discuss here. So as usual, before moving to the MCQ, let's have understanding of this particular chapter, and then we will move to the questions. And before that, I will be your mentor for IFS and PPB sessions for JAIIB May 2024 English medium sessions. If I talk about IFS session, it will be available at 7 p.m. Monday to Saturday only on Officers at 24/7. If you are looking for a PPB session, that is available at 6 a.m. Monday to Saturday only on Officers at 24/7. And both the playlists are also available, and they all every day they are keep updating. So if you want to check any particular session, you can check from the playlist. Okay, now let's start. First is FTP. FTP stands for foreign trade policy. It can also be called export import policy. It can also be called EXIM policy. Now what is it? As the name suggests, foreign trade policy. It means it's a policy which is related to foreign trade. Now then, what is foreign trade? Foreign trade is the simple exchange of goods and services among the countries. Or you can call selling and purchasing of goods and services among the countries. Or you can call it export and import of goods and services among the country. Or we can say when there is a cross-border transaction of goods and services among the countries, that is foreign trade. So all these are the foreign trades. Exports means selling goods to abroad. Import means purchasing goods from abroad. And when we purchase these activities, that is known as foreign trade. Now, in any country, the exports should be more than the imports. Reason, because if you have more exports, it means you are earning more money in your country and you are spending less money to the other countries. So when the exports are more than import, it's good for the economy. If I talk about Indian economy, the last time we have seen that our exports are more than the imports, that was the time of pandemic. After 17 years of gap in the pandemic, we have seen our exports increased the imports. Otherwise, always every year the imports are higher than the export. Now, why in the pandemic exports were higher than the imports? It's not because we started selling more goods to abroad. It was because of the lockdown, the raw material or everything have been imported less. As well as the people were not demanding goods and services because they were not having jobs, or if they are having job, they are not getting properly paid. So the demand of the people was also decreased. And because of this, the export increase. So it's not like we have started selling more goods to abroad. It was because we have reduced importing goods and services from abroad. And that's why after 17 years, our foreign trade have been increased. Okay, so this was the reason. Now let's move forward and talk about foreign trade policy administration. So obviously the government of India formulated this policy under the Ministry of Commerce and Industry. The Ministry of Commerce and Industry also have a particular act to look after the foreign trade policy, that is Foreign Trade Regulation and Development Act 1992, under which the government of India have created a post that named as the Director General of Foreign Trade. Now this Director General of Foreign Trade is responsible for implementing and for evaluating the foreign trade policy. Then the DGFT, Director General of Foreign Trade, will get help from Central Board of Indirect Taxes and Custom, that is CBIC, from RBI and the State Department. And this is how the administration works. And if you are looking for a hierarchy, first of all, there will be a Government of India who will make the foreign trade policy. Then second, under Government of India, you will find the Ministry of Commerce and Industry. Okay, under Ministry of Commerce and Industry, you will find the Foreign Trade Regulation and Development Act 1992, under which you will find Director General of Foreign Trade, under which Director General of Foreign Trade will get help from Central Board of Indirect Taxes and Custom, from Reserve Bank of India and state departments. So this is how the administration of foreign trade policy will be done in the country, or this is how it is done in the country. Okay, now foreign trade policy always be made for 5 years. The last foreign trade policy we have 2015-20. It is updated now because the 5 year have been completed. Because of the COVID, this 15 to 20 policy have continued till 2022. But after that, the new policy have been introduced. But we have to study the policy that have been given in your book by the IIBF, and that is Foreign Trade Policy 2015-20. If IIBF wants us to cover the updated foreign trade policy, for that IIBF will give a certain notice in which it will define us that this foreign trade policy you have to study, like it have done in the last paper. In October 2023 paper, before the examination, I think 1 month ago, IIBF have given us a notice in which all the 4 subjects updations have been given. If I talk about the IFS, you will find InvITs and Real Estate Investment Trust. These two got their minimum investment limit updated by the government, and that's what IIBF have given us in the notice, that this is what you have to study, not the old one but the new one you have to study. But IIBF haven't talked about foreign trade policy in that notice, so maybe possible in the May 2024 paper it will be updated or it will not be. So we have to cover whatever is given in the book. If IIBF said in the upcoming notice that this you have to cover, we will do that. Okay, so this is the information for all of you about the foreign trade policy. Now let's move to the foreign investment. Now what is foreign investment? It simply means investment to the other country. When you invest your funds, your money, your manufacturing plant, whatever, in the country, not yours, that is the foreign investment. The way to do the foreign investment, we have foreign direct investment, FDI. We have foreign institutional investment, FII. We have foreign portfolio investment, FPI. We have ADR, American Depository Receipt. We have GDR, Global Depository Receipt. We have IDR, Indian Depository Receipt. We have ECB, External Commercial Borrowing, etc. All these are the ways by which foreign investment can be done. It means you can invest from one country to another. From India to abroad, investment can be done. From abroad to India, investment can be done by using these instruments that we have discussed. So when you are going to study the conceptual study of this particular chapter, then you will cover each and every investment that I have told you till now in the detail. Okay, now let's move forward to the economic development. Now what is economic development? So to understand the economic development, let's first talk about the economic growth. Economic growth means simply increase in the national output of a country, or I can say increase in the production of goods and services in the country. So when your country's goods and services are increasing, the production of goods and services is increasing, that increases your GDP, and when your GDP increases, it increases your economic growth. Now because of this increase in your GDP, because of this increase in your economic growth, if you will find the positive changes in the economy, that's your economic development. What are the positive changes? Let's say your production of goods and services is increasing. Second, let's say because of this you have more employment opportunities. You have increase your per capita income, country's per capita income. Because of that, the literacy rate in the country have been increased. Because of that, the poverty have been reduced. Because of that, the infrastructure development have been increased. Or because of that, you can say the living standard of people became high. So if because of the increase in the production level of the country, any of these positive changes you are seeing, that's your economic development. So we can say economic development equals to economic growth plus economic welfare. So economic growth represents the increase in the production level, and economic welfare shows the positive changes in the economy. Okay, so this is the basic understanding of your foreign trade policy, foreign investment and economic development. Now let's move forward to the MCQ, and you have to keep answering the option, correct option. And if you are watching recording of this session, do let me know in the comment section how many answers you have given correct. First, dash is an investment fund that is based in a country other than the one where the investment is made. Forex, FII, foreign trade investment, or none of the above. So you are investing not in your country but in the other country. What type of investment it is? So it's very obvious, FII. Forex means the exchange of foreign currency. Forex is what? Foreign exchange. Foreign exchange is what? Exchange of currency. Second, foreign trade investment, you are investing in foreign trade. So if you are investing in the other country, not where you are, that is known as FII, foreign institutional investment. So right answer will be your B. Okay, the second question is asking about a dash is a financial investment made by a company or individual in another country's business interest. What is it? FCI, FDI, SEZ or FTI? Which of the following is it? Correct. A dash is a financial investment made by a company or individual in another country's business interest. It's very obvious, it's your FDI, foreign direct investment. So you are doing investment in the other country's business interest, that is your foreign direct investment. So option number B is correct. Next question. Which of the following is the vertical FDI form? So FDI we know, foreign direct investment. Now FDI can be in a, FDI is divided into certain forms. So they are asking vertical FDI. So this is what the vertical means. If you are talking about the form of vertical FDI, it will go from backward to forward, right? So it means your types will be backward and forward. So right answer is A. There is no straight vertical FDI, backward and forward it is. So right answer will be your A option. Okay, next. More expansion of foreign direct investment can boost dash. If you are expanding your foreign direct investment, it will boost which of the following? The money circulation, the demand, the employment, the unemployment. So if it's very obvious. If your FDI is increasing, it means more capital is coming to India. It means more businesses will start. So the first impact you can say, your employment will increase. Because of the employment, after that you will see the money will be increasing. And then because of the money, the demand will be increasing. But if you have more FDI in the country, it will expand your employment generation opportunities. Okay, so right answer is C. Next, FDI in India is allowed in two modes. First is government route and the other one you have to tell which of the following is it is. So if anyone or any countries, from any country or from anybody, if we want that they invest in our country, or they will take FDI in our country, there are two modes. First is government approved route. The government approved route means the prior approval is required before investing in the country. If you want to invest funds in India, you can do that, but before that, you have to take prior approval from the government under the government approved route. And the second method is the method where the prior approval from the government is not required. And if the prior approval is not required, it means it is automatic route. Okay, in government approved route, you have to give notice to the government that we want to invest in India in this particular sector with this amount of money. We want to introduce the FDI in the country. If government accepts that letter, you can come and invest in the country. Okay, that's the government approved route. In automatic route, you do not have to take the prior approval of the government, but yes, after investing in India, within 30 days, you have to inform the same to the RBI, Foreign Exchange Department. Okay. So the next method is, so the other method is automatic route. A. Next. In foreign trade, an adverse balance of trade occurs when which of the following happens? So we have discussed foreign trade policy. We have discussed the balance of payment. Balance of payment simply is the systematic record of all the economic transactions between India and rest of the world. That's your balance of payment. What is balance of trade? It means balance of trade is a part of your balance of payment which covers the export and import of goods. And if it is adverse, adverse means negative. It means unfavorable situation. You can call it deficit balance of trade, unfavorable balance of trade, negative balance of trade, or the adverse balance of trade. It will be there when you will find that in your country, the import is more than export. Because if you are importing more, it means money is going from India to abroad. And that will create a negative impact on balance of trade. So right answer will be your B. Now, FDI decisions are affected by which of the following? Government policy, political stability, state of economic development. So FDI decisions are affected by which of the following? So it's very obvious. The question is asking like if any of these decisions have been changed, will it affect the FDI decision? Like if a foreign company wants to come to India for the FDI investment, will government policy, political stability, state of economic development changes impact the decision of the company? Yes or no? If yes, then which of the following? And I would say all of the above. Reason, if government policies have been changed, taxes, duties or restrictions have been introduced by the government, it will become hard for the foreign company to work in the country. Political stability. If your country do not have political stability, let's say the government of your countries keep changing after 6 months. So obviously your policy will keep changing after 6 months. It will not attract the foreign direct investment. The state of economic development. If you want a manufacturing unit should come to India, then you have to provide 24/7 water facility, 24/7 electricity facility, all weather road connectivities, etc. The basic infrastructure that you have to give now. But if you do not have that basic infrastructure, no company will want to come India. It means all of these decisions will affect the FDI decision of a foreign company. Okay, so right answer is D. Next, FDI from Pakistan is placed under. So I can say by checking the name of the country, you can easily decide what type of route will be allowed. Automatic, government, or both, or either, and it's very obvious government approved route. Without government's approval, no company from Pakistan can invest in India. So if FDI, someone wants to take from Pakistan to India, they have to take prior approval of government. Right answer is B. Now, FDI limit in private banking. It means private sector bank. How much FDI is allowed? Apart from that, also let me know, in case of public sector, so let me know in case of public sector bank, payment bank, small finance bank and private sector bank, what percentage of FDI is allowed in all these categories? Okay, and the right answer is for private bank is 74, same for the payment bank, same for the small finance bank. But for public sector bank, it is only 20%. Okay, so this is the FDI amount or FDI limit in the different banking sector. Do remember each and every of these. In the October 2023 paper, they have asked about the FDI limit for insurance intermediaries, not insurance companies, but the insurance intermediaries. So do let me know in the comment section what is the FDI limit for insurance intermediaries right now. This question have been asked in the October 2023 paper. Now, foreign investment, foreign portfolio investment is the investment by dash in foreign financial instrument. So who can make the investment in the foreign portfolio investment? Individuals, firm, public bodies, or any of the above. Who can make investment, foreign portfolio investment? A, B, C, or D? And the right answer will be D, any of the above. Any of the above can do the investment in foreign trade policy. Okay, so right answer is your D. Good evening, everyone. Welcome to the official YouTube channel of Officers Adda 24/7. How are you all? So first of all, let me know is audio, video both are okay. Are we good to go? And as you know, every day at 7 p.m. we are meeting for your IFS session for English medium candidates. It means these sessions are helpful for those candidates who want the content, who want the questions and explanation, everything in English. These sessions are for them. If you are looking such sessions, that will be available on Officers Adda 24/7 for all the 4 subjects of your JAIIB, as well as all the 4 compulsory and the 1 elective paper of your CIP. So both languages are available in this particular channel, and this is your IFS session at 7 p.m. for English medium candidates. And if you want the same session for IFS that you will, for PPB, that you will find in the morning at 6 a.m. Okay, so to check these sessions out, if you are new to the channel and first time you are joining these session, do make sure you check once the playlist. In the playlist you will find all the recording of the session, because as you can see today it's our 9th class. So if it is our 9th class, already the 8 sessions have been done. And to check the recording of that, do make sure you check the playlist. So let's start here. 1 second. Okay, so what we have to do here, first of all, this is our 9th class of module A. Every day we are discussing one particular chapter of your, and this is your module number A, unit number 9. So what is the name of the unit? This is your International Economic Organization like World Bank, IMF, etc. So first of all, this is from your module A, unit number 9. If I talk about module A, you have total unit 9, and you can see, unit 11 units. In module A, you have total 11 units. Out of that, we are discussing 9th unit today. And apart from that, if you haven't seen the earlier 8 session, do check the playlist. So let's start. Before starting the session, I will be your mentor for IFS and PPB, both for the JAIIB preparation. Okay, so before moving towards the questions, as you know, every day we discuss the certain number of questions about your topic. So before that, let's understand what actually this international economic organizations are. First of all, whatever India is right now, it's not only because India have been always a self-reliant economy and was working itself for each and every development of the country. It was not like that. India have taken a help of a lot of countries as well as the international organization. If you remember unit number 6 and unit number 7, when we have discussed globalization and economic reform. So in the year 1991, India was in the situation where India will be declared as your bankrupt nation. But who saved India from being bankrupt nation? World Bank and IMF. India got the status of junk nation. It means the junk status have been given to the India by the international credit rating agencies as well as the India's credit rating agency. We have got the junk status. It means investing in this country is risky. Do not invest in this country. If you do, you will lose your money. So such kind of situation we have seen India have faced in 1991. So who helped India to overcome that situation? World Bank and IMF did. So the growth India got right now, and India right now is known as the fastest growing economy in the world. It is all not only because we always been self-reliant. No, we have dependent on other countries as well as we have been dependent on these international organizations as well. So World Bank, IMF, WTO, ADB, there are a lot of development banks or the international organization which helped us actually to become what we are right now. Okay, so that's what this chapter is talking about, like how India got help from different international organizations and how these international organizations help India to achieve its status. Okay, so let's start. First, let me talk about what is World Bank. So World Bank and IMF, they both are known as twin sister organization. Why they are twin sister organization? Because they both have been started together. Now, apart from that, why there was need to develop World Bank or to develop IMF? The need was there because first, after the World War II, we have seen the global financial system was not working properly and it was totally destroyed. So the USA said that we have to rebuild our global financial system, and to rebuild our global financial system, the USA have created a conference, has not created but have conducted a particular conference at Bretton Woods. So the name have been given Bretton Woods Conference. Now in this conference, a lot of delegates from the country have come and they have talked about this situation, and after the conference have ended, they got into a certain suggestion, or I can say the certain result, in which they said that we have to introduce the certain international organization which are definitely going to help us to have or to rebuild the global financial system. And after this conference, the 4 international organizations have been created, out of which one was World Bank, second was IMF, third was GATT, and the fourth was fixed exchange rate system. So these 4 international organizations have been introduced after the Bretton Woods Conference. So they all have been established to make sure that after the World War II, we will be able to rebuild the global financial system. So where World Bank was established, first of all, the objective have been given to World Bank that what you have to do, you have to make stability in the EU. So in the European Union, it was said that World Bank have to work towards in these countries and make them help to redevelop or to reconstruct themselves, and that objective World Bank have completed. After that, the work that have been given to World Bank was that you have to help the member countries in their development, in their reconstruction, as well as in their poverty alleviation. So these are the objectives why World Bank is working. And World Bank is not working alone. World Bank have its group which consists of 5 institutions. IBRD, International Bank for Reconstruction and Development; IDA, International Development Association; IFC, International Finance Corporation; MIGA, MIGA, Multilateral Investment Guarantee Agency; and the 5th one is ICSID, International Center for Settlement of Investment Dispute. These 5 institutions are the World Bank Group institution. They all are working with the same objective to make sure that the country will be developed, the country will be reconstructed, and the poverty will be removed from the member countries of World Bank. This is what World Bank is doing. IBRD is known as a lending arm of World Bank because it provides loan to the poorer countries. Second, IDA is known as soft loan window because it provides loan at a concessional rate or no rate of interest for a longer period of time with the grace period as well. Okay, IFC, International Finance Corporation, provides loan to the private entities of your country, of the member countries. MIGA provides the investment guarantee. It's a kind of insurance or guarantee agency that provide guarantee to the investment in those countries which have risk for the investment. Let's say XYZ countries there where there is a money laundering or terrorism activities or certain kind of things are happening. So nobody obviously want to invest in these countries, but World Bank have that country as its member country. So it's the responsibility of the World Bank to make that country develop. So the World Bank says the other countries that you have to invest in this country, in this particular sector if you want. If you want, we will be giving you 90% guarantee of your investment amount. Let's say you have invested because the World Bank has suggested, and something wrong happened to your investment, to your company, then 90% money will be returned by the World Bank. And that work is done by MIGA. Next we have ICSID. It works as an arbitration. What is arbitration? It provides settlement for the disputes that have happened in the member countries or the countries who are doing trade together or something else. So this is what the World Bank and its 5 organizations are doing. Now, if I talk about IMF, IMF stands for International Monetary Fund. International Monetary Fund is a twin sister of a World Bank, but they are working together, not together, but totally in the different objectives, because IMF provide loan to its member country, or it helps its member country. In what case? In the case where you will find that the country is facing economic crisis, or the country is facing your, what we can call it, economic crisis, or you can call it countries facing balance of payment crisis. So to overcome the country from balance of payment crisis and economic crisis, IMF works there, and IMF give loan to the country like it did to India in 1991. Okay, apart from that, if we talk about IMF, it also gives the policy suggestions to the member nation, like what should be done next, where should to invest, and what changes should be done in the monetary policy of your country. This is what the IMF do. And IMF is a single institution. It do not have any group. It is a single institution working alone. Okay, so this is the introduction of the chapter. Now we will be starting the MCQ. So first, let me know, I guess everything is clear about World Bank and IMF to all of you. Right, now next, let's just start with the questions and be very active in the session, so that each and every answer you will be able to give. So this is your first question. The IMF approves the creation of a given amount of new SDRs. These SDRs are distributed among the participating countries on the basis of their dash. Achha, when we talk about any international organization, do remember, let's say if your bank is providing loan to certain customer, how your bank is capable of providing loan to certain customer? Because your bank is simply accepting deposit from one person and giving loan of that amount to the another person. Similarly, international organization does. If any country wants to become their member, they have to contribute a certain amount of money. It means those countries have to contribute a certain amount of money, and that money will be used as providing loan to the other nations. And if you want to become the member of IMF, you have to give a certain contribution to the member, to the IMF, to become member, and that quota will be decided for the country, like how much you have to contribute in IMF, and that contribution will be in the form of SDR. What is SDR? Special drawing rights. It's an international reserve asset that was created by your IMF. Now this SDR is used to be known as the value of gold dollars. Earlier it used to be dollars, then it was converted into gold, like the value of the SDR was denoted in the gold. That was equivalent to the US dollar, certain amount of US dollar. But now we have SDR as a basket of currency. It have 5 currency in it: US dollar, euro, yen, pound, and renminbi. These are the 5 currencies which are your SDR. And the latest currency added is renminbi, that's from China. So if you want to contribute, distribution should be done as the basis of, or on the basis of, your quotas in the IMF. Clear? So special drawing rights will be decided on the basis of quotas in the IMF of a country. Second question, when did India became a member of IMF? Achha, one more thing important is there, that India is a founding member for World Bank and IMF. India is what? It's a founding member, because Britishers was there in the country, and when the World Bank and IMF was formed, India was the founding member for both the international organization. Apart from that, in the World Bank group, India is the founding member of IBRD, IFC, IDA. India is the founding member of these 3 institutions of World Bank. Apart from that, India is member of MEGA. It's not a founding member of MEGA, but just a member of MEGA. And ICSID, if we talk about, India is not a member of ICSID. Okay, so do remember, India is a founding member of World Bank, IMF, IBRD, IDA, IFC. These 5 institutions. Okay, now next. So India became member when the IMF was established. That was 1945. So right answer will be A. Next question. Next we have, which of the following are the main function of International Monetary Fund? The main function of IMF. Out of these, what do you think, which of the following is the main function? First is saying purchasing short-term foreign currency liabilities of the member nation, exchange rate regulation, deciding fiscal policy of a country. So if you remember, we have discussed in the paid sessions also that there are 2 types of policy that will be created in the country, that is fiscal policy and monetary policy. Fiscal policy formulated by whom? Ministry of Finance, Government of India, and monetary policy is formulated by RBI. Okay, so it's very obvious the third one is not correct. So the function of IMF is 1 and 2. So your right answer is A. Okay, fiscal policy will always be created by the nation's government. So right answer is A. Next, an IMS, that is International Monetary System, it is considered good if it fulfills the objective of dash. Objective of dash, these are two statements have been given to you. Out of these you have to tell what objective have to be fulfilled by International Monetary System to be known as a good monetary system. A, B, C or D. First, maximizes the flow of foreign trade and foreign investment, leads to an equitable distribution of gains from trade among the nations of the world. And I think both are true. Both are the objectives of International Monetary System. If these objectives have been fulfilled, it means very obvious you have achieved your objective. So right answer is your both. Now you have a good International Monetary System. Next, IMF reviews members' quota once in every dash. So in certain years, IMF have to review the member quotas, like the nation's quota. When you contribute in IMF to become the member, that will be in a certain years it will be reviewed. Similarly, the SDR value will be reviewed in a certain year, so that if any new currency have to be added, it will be added. And if any currency have to be removed, it will be done by the IMF. So that duration is once in 5 years. Once in 5 years, the quota as well as SDR both have to be reviewed by IMF. So right answer we have is D. Next, which of the following statements are correct? And you have these two statements. Out of that you have to answer which is correct. It is talking about the relation between India and IMF. First is saying India has been borrowing from IMF through the financial transaction plan due to critical balance of payment situation. Second is saying India also contributes to the IMF through the extended first fund facility. So what relation is there? So also remember, India have taken loan from IMF last in 1991. Okay, after that till now India haven't taken again loan, and it is good for us that we do not need in the future as well. So the right answer here is none. No, none of the above is the relation between India and IMF. Also, right statement is none of the above. Okay. Clear? Let me know, is it clear to all of you? Okay, so I guess it is clear to all of you, right? So now let's start with the next question. Let's move to the next question, that is asking about the highest percentage of World Bank total loan have been made for the development of which of the following sector? So we know World Bank gives loan for the development of your country, for each and every sector of the country's development. Whichever sector needs development, World Bank give loan to those sector. Now out of these, industry, agriculture, energy and transportation, out of these four, the total loans highest percentage have been given in which sector? Is it industry, is it agriculture, is it energy or the transport? A, B, C or D? What do you think? Which of the following is correct? And the right answer will be your energy. The highest percentage of the World Bank total loan have been given to whom? It have been given to energy. So right answer is C. Next, which is not one of the basket of 5 currency used in SDR valuation. So SDR, you know, special drawing rights it is. It is international reserve that have been created by IMF in 1969. Okay. And I have told you it is also known as basket of currency because 5 currencies it is. It covers 5 currency, out of which of the following is not? US dollar is there, Japanese yen is there, Chinese renminbi is there, but not the Canadian dollar. Only US dollar is a part. So US dollar, euro, yen, pound and renminbi. These are the 5 currencies, not the Canadian dollar. So that's why your right answer will be B. Okay, and the latest added currency is your renminbi that have been added in October 2016. Next we have World Bank consists of which of the following? So you have certain international organization's name here. So World Bank is a group, as I have told you. 5 institutions are there. Which of the following is not a part, or which of the following is consist under the World Bank? IFS, IFC, IDA or IMF. As I have told you, IMF is the single institution. It has no group. It's a single institution. So your right answer will be 1 and 2. It means A is the correct option. Right answer will be your A. Next question we have here. The Dash is the largest development bank in the world. It offers financial solution and policy assistance to nations in order to help them eliminate poverty and spread the benefits of sustainable growth to all their citizens of country. So which World Bank, WTO, GATT or IMF? Out of these, which bank is the largest development bank? Now let's check what are the offerings of the bank. It offers the financial solution and policy assistance to the nation and also help them to eliminate the poverty, okay, and also make sure that the sustainable growth of all their citizens will be done. So it's very obvious, IMF do not work to eliminate the poverty. GATT have been replaced with WTO in 1995. It means it is working for the international trade, for the foreign trade rules regulation. So the right answer will be your what? World Bank. World Bank is actually working to eliminate the poverty as well as to have a sustainable growth in the country. So your right answer will be D. Okay. Now, so okay, these were the all questions we have discussed. So first let me know, is there any kind of doubt to any one of you? Is there any doubt in these questions? Let me know. Also let me know how many answers you have given correct here. Okay, so this is the information for all of you that we have started the Achievers batch. I have started taking classes in this batch. From 8th of December, we have had our orientation class. We have had our first demo class that happened yesterday on YouTube. You can check that. And now we have started Module C preparation in detail with the first unit of Module C. That is the unit number 20, overall Indian financial system. So if you haven't seen the demo session, do check that. And if you are preparing for your JAIIB paper, do make sure you enroll as soon as possible, because there is a lot of things to be done to make sure that in the single attempt you can clear this paper. So do not take it very lightly. Be very prepared for your paper. And this batch will be comprehensive batch for all the 4 subjects of your. Now what will be available in this batch? You will get conceptual live classes that will be also available 24/7 recording. You will find the class PDFs as well to revise your content. Apart from that, topic wise tests, full length mock test will be there, as well as the ebooks will be there. So all these benefits you can find only on this particular Lakshya batch, this particular Achievers batch of your JAIIB May 2024 paper. Okay, apart from that, you have Mahapack as well. To enroll, Mahapack will cover all the benefits of your Achievers batch, plus it will cover all the upcoming batches. Plus it will cover your mini and Maha marathons for all the subject. Okay, so how to enroll in any of these batch? For the enrollment, first of all, you have to download the Adda 24/7 application. So download the app, then go to the home page of the application. You will find the exam category. Select the exam category, that is JAIIB, CIB. Click on the JAIIB May 2024. Click on view all and you will find all the batches. The Mahapack, the Achievers batch, the individual subject batch, everything is available. Now how to enroll? The process of enrollment is same. Simply click on the batch. Do read the offerings. When you scroll down this, you will find the package includes what, and as well as you will find the study plan here. As I have told you, 2 subjects have been started, so two subject study plan is already updated. When the next plan will be introduced, next subject will be introduced, you will get the study plan for the same. Now the validity of the batch will be 9 months. How to enroll? Just click on the buy now option. If you use this code, you will get only 75% discount. So do not use this. Use the code Y496. Click on the apply. When you apply, you will find here 77% discount. To get 1% additional discount, what you have to do? Just use the same code on application, because if you use this code, you will get 78% discount on application. 9-month validity. IE, IFS, retail banking, both the subject have been started in this particular batch. So if you have decided that you have to clear the May 2024 JAIIB paper, do enroll soon. Okay. So this is all for today. Now let's end the session here. If you find any kind of doubt in any kind of question or content or whatever, you can ask in the comment section. I will check your comment and answer there. Apart from that, if you want to join these YT sessions on the regular basis, do subscribe Officer Sir 24/7 YouTube channel and press the bell icon so that all the upcoming sessions notification will be given to you. Apart from this, do make sure you share this session with your friends who are also preparing for the JAIIB paper, and for morning PPB session you have to join at 6 AM. Okay, so that's all for today. Thank you all for joining the session and see you in the next class. Take care everyone.